industry stakeholder workshop today, a roundtable discussion on the various policy submissions that the authority, in conjunction with the larger capital market stakeholders, are seeking to refine in order to submit through the National Treasury for consideration with, in the context of the next finance bill, finance statement, that's targeted to come out in about March next year. As you'll note, the policy process and development of the finance bill are actually operating on an advanced timeline in light of the impending elections in Kenya in August next year. So the National Treasury has targeted to submit the budget statement as well as proposed finance bill by the end of March next year to the National Assembly to ensure it can be considered in due time. In that context, the authorities are very honored that a wide spectrum of our industry stakeholders have come together, from policy makers, from ministry representatives, to other regulators, to industry associations like the Fund Managers Association, the Association of Collective Investment Schemes, the Association of Stockbrokers and Investment Banks, as well as the Association of Custodians, to have an in-depth deliberation around what are the key policies that are most important in helping to, one, deepen the capital markets, two, help build greater awareness and understanding around the opportunities that are presented by the capital markets, as well as helping to address some of the key questions around creating appropriate incentives to ensure that more players are taking advantage of capital markets instruments.
Do you have opinion?
The policy submissions that come out of these deliberations will be submitted to the National Treasury following discussion and adoption by the Board of the Capital Markets Authority by by November this year.
In terms of speaking of land policies and policy, you're drafting this policy, do you foresee consensus?
I think we're very confident because all this policy discussion is going on in the context of the much wider capital markets, 10-year capital markets master plan, which was an industry-owned master plan document setting out the key strategies, priorities, and implementation timelines for the transformation of the capital markets in Kenya to really position us as the heart of capital markets financing on the continent. So given that we already have very strong consensus around the key pillars of the 10-year master plan and the key activities that have already been designated thereunder, these kinds of policy discussions are really looking at the fine-tuning the implementation of the key strategies and targets and objectives of the master plan document. So we remain very confident that we will have very broad industry, not only engagement, but also common adoption of the principles.
What are the main challenges the country is having?
Overall industry perception on the opportunity, the macroeconomic environment that we're operating in, and whether that is as conducive as necessary, and ultimately whether there is a strong understanding of the opportunities that come from long-term investment. I think we must be very conscious, tied, one, to the macroeconomic environment, but also some of the other products available. The market, to a degree, can be a little short-termist in its outlook. The market is seeing relatively strong returns from short-term instruments, and therefore we need to build a better understanding what are the opportunities that can come from long-term investments in the foundation of capital markets instruments. Contracts ever written fails because it is not really effectively responding to the industry need. So that has been the process that we're working with the Nairobi Securities Exchange, the consultants they've brought in, as well as the significant capacity that we as the authority have had in mind to make sure that the first contracts that are listed will, one, respond to the fundamental industry need in Kenya, but will also be sustainable and be able to start providing opportunities for hedging and risk management for entities in our country. So the first contracts that the NSE has put forward relate to single stock futures and index-based future products. They have also held discussions around the introduction of currency futures to allow for the hedging of foreign exchange risk. But we know that the whole introduction of, especially the currency future instruments, are reliant on continued engagement with the Central Bank of Kenya, National Treasury, to make sure that the introduction of those kinds of instruments would not introduce any kind of instability in the currency market.